well. Thanks.
Thank you very much, Trish. Indeed, anxiety on Wall Street at this hour as markets trip over trade, a strengthening dollar and a crude haircut. I don't mean a bad haircut. I'm talking about oil. As you can see, the Dow off 207 points, down less than 1%, but nevertheless, it has been a down day throughout the session. The S&P, NASDAQ, and as you can see, oil down 3% on the day. The so-called fear gauge, that's the volatility index, hitting a 6-week high. That gauge now at 15, up 17%. In the old days, it was in the 20s and 30s. So let's keep perspective. But nevertheless, the VIX finally coming up a little bit in the world. The selling started right at the opening bell. The Dow falling 334 points at the low after the latest report showed a big jump in oil stockpiles. Meantime, retail sales gave a boost to the dollar, but retailers taking a punch to the gut as Macy's drags its competitors down. Also, fresh worries on the trade front from Turkey. Yes, it's a currency crisis and a WTO challenge to U.S. tariffs by China does have investors looking for safety. Our experts are here to analyze it all. And this big story of the day, Charlie Gasparino reporting that Tesla has been subpoenaed by the SEC over Elon Musk's funding secured tweet. There you have it, folks. The Dow coming off session lows. In the final hour of trade we go after briefly dipping below 25,000. Come back a little bit. Still a big sell-off, but nevertheless, it's coming back a little bit. The Dow and S&P are on pace, though, for the 6th down session in the last 7 trading days, with the NASDAQ down 3 of the last 4 sessions. Oil, let's get to that, falling sharply along with the markets today after the latest data showed an unexpected rise in crude inventories. We're expecting a drawdown of more than 2 million barrels. We're up nearly 7 million barrels, according to the Energy Information Administration. The analysts had expected, as we say, a fall of 2.4 million barrels. Oil, as a result, dropping 3% or over $2 to settle at $65 and a few cents per barrel. That's the lowest level, by the way, since June the 6th. Energy stocks taking the biggest hit on the inventories report, as you can imagine. Some of the biggest decliners include Marathon Oil, Cimarex Energy, Pioneer Natural Resources, Newfield Exploration, and Anadarko Petroleum. All of them getting hit hard today. Marathon down more than 6.5%. Also putting on pressure, though, let's not forget this, a strong U.S. dollar, which hit its highest level in more than 13 months against a basket of currencies today. Helping the dollar was strong retail sales numbers, manufacturing output, and worker productivity. The U.S. economy humming along very nicely. The euro, the pound, the Canadian dollar, Mexican peso, all of those currencies hurting against the U.S. dollar. One of the biggest losers today, Macy's. And while the retail giant raised its annual forecast and reported a rise in key sales measures, a drop in sales causing the stock to tumble today, down more than 14%, down nearly $6 at $35. Q2 sales falling a little more than 1%, according to Macy's. Overall, not a bad report, but getting punished on slow growth. Other retailers like Kohl's, Nordstrom, The Gap, JCPenney, and Target all falling in line with Macy's. It's a tough day all around. As you can see, Kohl's down 5.5%. JCPenney, it's a $2 stock, but down 9.5%. The greenback strength weighing on yellow and red metals. Gold hitting an 18-month low. Check that out. Even though you'd think people are going for a safe haven, not gold apparently, down $16 at $11.84. And copper, I think it's more reddish orange, but we'll go with red. A key component in construction and manufacturing is now in bear market territory. The drop is a red flag, of course, for investors that see base metals as an economic indicator. Copper in bear territory. All right, with all of that said, let's get to the floor show. We've got traders, as always, at the New York Stock Exchange and the CME Group. Let's get to Teddy Weisberg, my great friend down at the NYSE. Teddy, you've seen it all 2 or 3 times over. I've never talked about the Turkish lira more than we have in the last week or so, at least the last 3 or 4 days. What's playing here? What's at play? Is it Turkey? Fears about China's economy? Is it an August profit-taking session? What's going on?
Well, perhaps all of the above. But I think when it comes to the commodities, obviously there's a flight to our currency because of all this turmoil outside of the U.S., whether it's created by our government or created internally at the various countries. But the bottom line is the dollar has been, extremely strong, and that weighs heavily on commodities. And a lot I read on the screen this morning, almost all red, haven't seen that in a while. but there is some green. The big pharmaceuticals are acting quite well today. They're all up, and some of the other defensive stocks are up. So on balance, it's a pretty ugly day, but I don't think we're quite ready to throw the baby out with the bathwater.
Well, you're still smiling, Teddy, so I feel okay. Ira Epstein at the CME. Ira, you know, listen, our economy is humming along quite nicely. We have a very solid foundation, but there's continuing concerns about the rest of the world, China in particular, but there is slowing growth around the world. Does that eventually catch up to us?
To a degree, but remember, this is part of President Trump's plan. When you go into a tariff war and you go against all of our partners and others, what takes place is you slow their economies down. You hurt their currencies. You hurt their trade. So I think the president's looking at this in one way, that it's a win for him. He owns the stock market. I don't think he'll let it get out of control. And keep in the back of our mind, June, July, and August are thin trade months in the summer. Volatility picks up in the VIX. It's doing it right now. And then come September, things get their footing back under them. Do one trade deal and watch how the stock market recovers.
That's a very good point to make, Ira. Larry Shova, I wanted to mention oil to you, if I could. My goodness, oil heading down. We have a lot more in supply. I don't know if we have a glut of oil, but is this also a reflection of a slowing global economy?
You know, I think it could, because for weeks, maybe months, the story has been supply and the log jams and the political strife around the world, supply, and nobody or the market didn't really care about the demand side of the story. When you have China in the middle of a deleveraging process that started a year ago, we're seeing that effect in copper prices, gold prices, also oil prices. And so with that, it's just a trickle-down approach. Demand, keep in mind, was at a 10-year high as of maybe the first quarter of 2018, and it just could not continue in that trajectory. So I think we are plateauing from a very high level with regard to demand growth.
All right, gentlemen, very good. Thank you very much. Teddy, Larry, and Ira, we appreciate your input on this day where, well, the markets, I mean, we're down 169 on the Dow. We're trying to come back perhaps a little bit. But let's get to this story. My, oh, my.